The car market, both new and used, is going through a tough time. In 2024, it looks like things will get even tougher before they improve. This video will share some eye-opening facts and figures that are crucial to know if you're thinking about buying a car. By the end, we'll suggest the best time to make a purchase. Right now, the situation with car loans in the US is worse than ever. On average, Americans with car loans owe $6,000 more than their car's value. This means many people can't trade in their cars without losing a lot of money, which is a really tough spot to be in. This is particularly concerning when you look at the skyrocketing number of car repossessions. They've increased by 21% compared to last year, reaching an all-time high. Why is this happening? Well, during the COVID-19 pandemic, many people paid too much for their cars. Dealerships often charged more than the car's suggested retail price, adding thousands of dollars in extra fees. As a result, many car buyers are now finding their vehicles are worth a lot less than what they paid. This has led to more people being stuck with loans that are more than the value of their car, making it difficult for them to sell or trade in without losing money. Remember when a car payment over $1,000 seemed outrageous? Well, now the number of people with such high payments has risen by 18% in just 1 year. Many people are struggling to manage these substantial car payments, contributing to the increasing rate of car repossessions. Additionally, the cost of living has soared. House prices, grocery bills, and general expenses have all risen sharply since the pandemic, making it tough for many to keep up. On top of these rising costs, car payments add an extra burden, pushing some people to their financial limits. Interest rates on car loans are also sky high. Even those with excellent credit scores, around 800 or higher, face high interest rates ranging from 7% to 10% for new cars and up to 12 to 13% for used ones. For those with average or low credit scores, the rates are even steeper, up to 15% for new cars and as high as 25% for used cars at places like CarMax. Considering this, purchasing a $50,000 vehicle can end up costing over $78,000 or $80,000 after interest. Over a typical 72-month loan period, the car's value decreases significantly, and by the end of the loan, a car that originally cost $80,000 might only be worth $25,000. This stark depreciation shows how challenging the current car buying and ownership landscape has become. An important factor to consider is the average time a car stays on a dealership's lot before it's sold. During the COVID-19 pandemic, cars were selling incredibly fast, typically within 3 to 7 days. This high demand meant that it was hard to find many cars at dealerships, let alone the specific one you might want. People often had to settle for a car that wasn't their first choice in terms of colors or features. Dealerships noticed the high demand for certain popular models like the TRD Pro and took advantage by adding significant markups, sometimes charging an extra $5,000 to $10,000 over the manufacturer's suggested retail price. Now the situation has changed. The average time a car sits on the lot has increased to 70 to 80 days, and it's even started to rise a bit more over the past month and a half. We expect this trend to continue into 2024. This means cars are taking much longer to sell, indicating a significant shift from the quick sales during the pandemic. One of the most shocking changes in the car market is the increase in the manufacturer's suggested retail price. Since 2019, there's been a 36% rise in MSRPs across all types of vehicles. That's more than a third added to the price of the cars. Take a Toyota 4Runner, for example. In 2019, a 4Runner TRD Pro could be bought for $48,000. Despite only minor updates to the model, its price today has jumped to $58,000 for virtually the same vehicle. Even more astonishing is the price jump for the Toyota Tundra TRD Pro. In 2021, its MSRP was $54,000. Now that price has escalated to $77,000. These increases highlight just how dramatically car prices have surged recently. Many people haven't seen their wages increase by 36% since 2019, more like an 8% to 10% raise for most. So while the price of many things, including cars, have soared, salaries haven't kept pace, creating a difficult situation for many. Despite cars now taking 70 to 80 days to sell on average, some dealerships are hesitant to lower their prices. They're clinging to the high markup practices from the pandemic era when cars would sell quickly no matter the price. This stubbornness to adjust to the current market could be hurting dealerships as they end up with overflowing lots and cars that remain unsold due to their reluctance to reduce the inflated prices. Dealerships found themselves in a difficult position after years of increased markups, especially during the pandemic. Now, as the market adjusts, consumers have the opportunity to make informed choices about where to shop. If a dealership previously engaged in adding significant additional dealer markups to their vehicles, it's a good idea to remember this behavior and consider taking your business elsewhere. In a sense, it's about holding dealerships accountable for their past actions and supporting those that maintained fair pricing practices. Regarding electric vehicles, the government's push toward cleaner energy and reduced emissions has led to stricter regulations and incentives for EV production and sales. This has resulted in a noticeable increase in the number of electric vehicles from manufacturers. However, despite these efforts, the sale of EVs has not met expectations. While vehicles like the F-150 Lightning and the Mach-E Mustang were introduced amidst much fanfare, their sales have slowed, indicating a potential disconnect between the push for EVs and consumer demand. This has led to an accumulation of unsold EVs on lots, highlighting a challenge in the automotive industry's transition to electric mobility. Both of these points reflect the current dynamics and challenges within the automotive market, from the consequences of pricing strategies during high-demand periods to the evolving landscape of vehicle types and consumer preferences. Some of you might have differing views, but there's a noticeable trend of vehicle manufacturers relocating their production facilities to countries like Mexico, where labor is cheaper. Despite this move to reduce production costs, the prices of vehicles continue to rise, as we've mentioned, with a 36% increase in MSRP since 2019. For instance, Toyota, known for its commitment to quality and craftsmanship, especially in its Japanese-manufactured vehicles, has started moving some production to Mexico. This shift is concerning to some consumers who value the craftsmanship and job opportunities associated with vehicles made in Japan or the United States. Many appreciate when a company like Toyota builds vehicles in the US, as it provides jobs for Americans and is seen as a sign of quality and investment in the local economy. The potential move of models like the Tacoma and the upcoming 6th-generation 4Runner to Mexico has stirred some dissatisfaction among fans who prefer the quality and economic impact of vehicles made in Japan or the US. The rise in loan defaults and car repossessions signals a troubling trend in the vehicle market. However, an even more telling sign of what's ahead is the increase in the number of cars dealerships are selling at auctions or wholesaling. This surge in wholesale activity suggests significant changes in the market soon. If you're considering buying a new car, the next 90 days might be the right time to start looking. Historically, retail prices at dealerships tend to follow trends in the wholesale market with a delay of about a quarter. Therefore, by around April 2024, we expect to see noticeable decreases in retail prices. We're interested in your opinions. Do you think the market will improve soon, or are we in for more challenges? Share your thoughts with us. And if you found this video helpful, consider liking and subscribing for more insights as we move further into 2024. Thanks for watching, and we'll see you next time.